What's up guys, and welcome back to Wall Street Millennial. Today we're examining the epic rise, fall, and rise again of the world's biggest venture capital investor. We're talking about the Japanese technology conglomerate SoftBank. This video was chosen by our channel members. Members get access to our videos one day in advance and also get to vote on some of our video topics. SoftBank is a massive company with a market cap of 13 trillion Japanese yen, or roughly 120 billion US dollars. They have assets worth $367 billion, making them the largest technology-focused investment firm in the world. SoftBank's stock rallied more than 50% in 2020, fueled by the success of the technology companies within its portfolio. This has pushed the stock near its all-time high valuation. However, the story of SoftBank is far from a straight line up. When the tech bubble burst in 2000, the company almost went bankrupt, with the stock falling 98% from its highs. More recently, they invested almost $20 billion into office space startup WeWork. They lost almost everything on this investment when the troubled company was forced to cancel its IPO in 2019. This, along with a few other high-profile failures, made people question whether the company had lost its edge in venture capital investing. But with their stellar performance in 2020, SoftBank is back on top of the food chain in Silicon Valley. First, we have to establish what SoftBank does. Despite their name, the company is not actually a bank. SoftBank was established in Japan by founder Masayoshi Son in 1981. They started off as a publishing company where they distributed OPC Consumer Technology magazine. The magazine was a huge success and had circulation of 140,000 copies by 1989. In the 1990s, Son saw the potential of the internet in its early days. In 1996, he launched a joint venture with Yahoo to make Yahoo Japan search engine, which became the dominant search site in the country. Fresh off the success that he had with Yahoo Japan, Son had grand ambitions to expand SoftBank into the world's largest technology conglomerate. He used the profits from Yahoo Japan, as well as capital raised from IPOing SoftBank on the Japanese stock market, to invest in early-stage tech startups. In 2000, he invested $20 million in exchange for a roughly 25% stake in the fledgling Chinese e-commerce startup Alibaba. This turned out to be one of the greatest investments in history, increasing in value more than 7,000-fold to be worth roughly $140 billion today. But the eventual success of these investments would not be recognized for quite some time. When the tech bubble burst in 2000, SoftBank stock fell 98% as many of its startup investments went bankrupt. This wiped out $75 billion from the company's market cap. Given this failure, Son decided that he needed to change the company's direction and aggressively moved into the internet and telecommunications space with his new company Yahoo Broadband. He reasoned that if Japan was to fully adopt the new technologies enabled by the internet, ordinary people would need affordable and reliable access to high-speed internet. SoftBank borrowed $2 billion to build a nationwide gigabit Ethernet network that supported 12 megabits per second download speed. This was orders of magnitude faster than other alternatives at the time. He made the service compelling to customers by charging the equivalent of just $21 per month. At the time, the project was viewed with much skepticism by the media and financial analysts. Some critics said investing so much money into high-speed internet was akin to selling $1 bills for 80 cents. It will allow you to grow rapidly, but will never be profitable. The internet did grow rapidly in Japan in the early 2000s, allowing SoftBank's broadband service to win many millions of customers and generate billions of dollars for the company. Son proved the haters wrong and was now sitting on a war chest full of cash worth billions of dollars. He used this to acquire Vodafone Japan for $15 billion. That acquisition allowed SoftBank to enter the country's $78 billion mobile telecommunications market. By the late 2000s, SoftBank had become a dominant player in Japan's internet and telecommunications industries. Its stock was slowly but surely making back some of the losses it experienced during the tech bubble. With SoftBank now owning a stable cash-generating telecom business, Son had access to billions of dollars for new investments, both directly from the cash flow as well as through the company's ability to raise debt financing. He transformed SoftBank from a telecom company into a massive conglomerate, owning stakes in a wide range of innovative tech companies. In 2013, they acquired a 51% stake in Finnish mobile game company Supercell. Supercell is the company behind the hit game Clash of Clans. They bought a controlling stake in the French company Albaron Robotics, which they rebranded as SoftBank Robotics in 2014. SoftBank Robotics creates the humanoid Pepper robot, which greets customers at SoftBank mobile stores. In an attempt to expand their international footprint, they bought a $1 billion stake in South Korean e-commerce company Coupang in 2015. In 2016, Sun announced a $32 billion acquisition of British mobile semiconductor manufacturer ARM Holdings, which was SoftBank's biggest deal ever. Over the years, SoftBank made hundreds of investments in startups around the world. He had billions of dollars worth of capital to deploy and wasn't afraid to invest it in money-losing businesses. He was also very aggressive in negotiations with founders. He would often threaten to fund a company's competitors if they refused to accept his investments. By the mid-2010s, SoftBank was one of the most well-respected technology investment firms, and Masayoshi Son was considered a legendary investor. The 2014 IPO of Alibaba made SoftBank's stake worth $60 billion in the first day of trading. This is 3,000 times the $20 million he spent to buy the stake 14 years prior. Leveraging his track record, Son launched the SoftBank Vision Fund, which aimed to raise $100 billion to invest in disruptive technology startups. This made it the largest venture capital fund in the world. Son convinced Saudi Arabian Crown Prince Mohammed bin Salman to invest $45 billion from the country's sovereign wealth fund with the venture. A further $28 billion came from SoftBank's own balance sheet. The remainder came from other investors including Apple, Qualcomm, Larry Ellison, and others. Son now had $100 billion of capital to put to work. Between 2017 and 2019, the Vision Fund invested roughly $10 billion into the shared working space company WeWork at a peak valuation of $47 billion. At its core, WeWork was a real estate company, not a tech company. While it was growing fast, it was burning through billions of dollars of venture capital funding, with no real path to profitability. WeWork founder and CEO Adam Neumann also mismanaged corporate money to fund his own extravagant lifestyle, and entangled the company in shady related party transactions. In 2019, WeWork tried to do an IPO, but there was so little demand for its shares that they had to call it off. SoftBank was forced to write down its stake in the company by 90%. The Vision Fund was also invested in dog walking marketplace Wag, which they sold in 2019 for a huge loss. One of the fund's biggest investments was in ride-hailing company Uber. They had to take write-downs on this position to the tune of billions of dollars when the stock tanked following its 2019 IPO. This caused the fund to report a $9 billion net loss in November of 2019, with Masayoshi Son admitting that he exercised poor judgment in the WeWork investment. In 2019, SoftBank tried to raise a second Vision Fund with a target of $108 billion. However, with the abysmal track record from Vision Fund 1, investors were understandably hesitant to give them more money. They were only able to raise less than half of their goal. When the pandemic hit in 2020, things were not looking good for SoftBank. With economies closing all around the world, many of their portfolio companies were having their businesses disrupted significantly. The Vision Fund reported a jaw-dropping $18 billion loss in the spring of 2020. This can mostly be attributed to further declines in WeWork and Uber. Both companies suffered steep declines in demand relating to the pandemic. In an investor presentation, Sun compared their portfolio companies to unicorns that are stuck in the valley of the coronavirus. While some will die in the valley, others will survive to make it out alive on the other side. Many at the time criticized him for making this rather childish analogy. But Sun wasn't about to go down without a fight. At the beginning of the pandemic, SoftBank announced that they would sell $41 billion worth of non-core assets and use the proceeds to pay down debt and repurchase shares. This took advantage of the company's depressed share price during the pandemic sell-off. While some of the Vision Fund's portfolio companies like WeWork were negatively impacted by the pandemic, others were perfectly suited to the stay-at-home economy. The Vision Fund made investments in food delivery companies including DoorDash and Grab. These companies saw their businesses boom as people ordered food to the safety of their homes. On DoorDash alone, SoftBank turned a $680 million investment into $11.5 billion when the company IPO'd in December of 2020. They also made billions of dollars from their investment in Coupang when it reached a valuation of $84 billion on its first day of trading. Even Uber, which initially tanked at the beginning of 2020, recovered to well over its pre-pandemic levels, as investors anticipate a rebound of their business post-pandemic. SoftBank's winners outweighed its losers, and the company posted a record profit of $46 billion for the year ended March 2021. The majority of these profits came from the Vision Fund, with the 2020 profits more than offsetting the losses that they suffered in 2019. And Sun thinks that he can recreate the success going forward in future years. Between the two Vision Funds and SoftBank's other investments, they have a total of 220 portfolio companies. Although not all of them will be successful, if just a few of them can be the next Alibaba, the returns could be tremendous. Sun created an ecosystem where he can share SoftBank's expertise in AI and other disruptive technologies with the Vision Fund's portfolio companies. Although many of his bets are long shots, SoftBank is one of the only companies with enough scale to provide meaningful capital to these unicorns. Sun has proven himself as a legendary investor through his investments in Yahoo Japan and Alibaba, as well as his ability to navigate his company through the pandemic of 2020. And it is likely that SoftBank will continue to dominate the venture capital industry for many years to come. Alright guys, that wraps it up for this video. What do you think about SoftBank's comeback? Let us know in the comments section below. If you like this content, don't forget to hit the like and subscribe buttons. Also, check out our second channel, The Economic Outlook, where we post interesting videos about economic topics. As always, thank you so much for watching, and we'll see you in the next one. Wall Street Millennial, signing out.